Reverse repos are hitting all-time highs, so we need to talk about it as well as go over the Ortex data because there are some things that you guys need to be made aware about. We're also going to go over the stock code tracker data as well as the dark pool data. So we're going to get into everything you guys need to know, specifically these reverse repo numbers, because this chart right here, as you guys see, it is off the chain. It is over double the highest it has ever been since this program was first started in mid 2013. So we're going to talk about it. The only thing that I ask is that you tap, tickle, touch, or smash the like button, as well as comment down below and subscribe to the channel to help push this video out to even more people. All right, guys, let's get into the video. So reverse repurchase agreement, better known as reverse repos with the feds. Now, take for an example, you have all these different banks of all different sizes, small and big. Now, all these banks have to keep a certain amount of money on their balance sheet. That is called their reserves. So once you do go over that threshold and you're not investing that money, or you don't have anything else to do with that money that generates income, that is a liability for one factor, actually two factors, but the biggest one being that they're paying out interest on that money to clients at the bank, as well as you do have inflation that breaks down the value of that money. But that is a more longer term consequence of just sitting on money. Now, what happens with these reverse repos on that excess money? The banks don't want to hold it on their balance sheet or in their treasuries, so they give it to the Federal Reserve for treasury bonds, and these pay out a very, very small interest rate, but they have to do that just so they're not losing money on the cash they are holding, or not losing too much money on the cash they're holding. But the key here, guys, this is a very short-term thing, usually overnight or up to about 15 days out. This is not a long-term extended thing that these banks do, because ultimately they will find something to do with that money. This is a very, very short-term thing. Now, take for an example what Scott Skyron said, Executive Vice President Fixed Income and Repo at Curvature Securities. He said either there's too much cash or not enough collateral. So that is the key here, guys. These treasury bonds, they are seen as collateral. So is cash to a certain extent, but it's better to have collateral as treasury bonds because that is seen as a no risk investment, right? The odds of the government shutting down and going bankrupt, very, very low, if at all. So that is why we are seeing this going on with the reverse repos, but there might be another reason why this is going on, and this is very key that nobody is talking about. So the Fed actually just raised this interest rate that they're paying on their excess reserves. So with all these treasury bonds going out, they just set this number at a higher rate. So it says, and lifted the rate in which it pays on overnight reverse repurchase agreements to 0.05%, a tool used to set a floor on short-term interest rates. This rate was only at 0.01%, so they were essentially getting nothing for their excess reserves for these treasuries, but now they are getting a little bit more. So that might be a reason right there. Also, another reason why this may be happening and we're seeing this huge spike in reverse repos is obviously we know that about 25 to 40% of all the world's money, but mostly in the United States, was printed in 2020, and we know that inflation is starting to heat up, and it is well over the Federal Reserve's 2% inflation target per year. So the reason why the Fed obviously raised this repurchase rate to 0.05% from 0.01% is to restrict some of that money that the banks are going to be able to use and lend out. But I think the more logical reason here is the collateral part that we just talked about, either too much cash or too much collateral. I think it really has to do with the collateral and all these banks giving out loans to over leverage hedge funds and institutions. I think that is what is really going on here. Now, we need to take a look at the Ortex data as well, because we see the share utilization at 88.60%, and even in yesterday's video when we went over this information, it was at 94.28%. So essentially what this means is more hedge funds and institutions are willing to sell shares short. Now, we also have some that even came out today, a couple couple other banks that are saying they're not going to do this. Now, some other banks are probably stepping in, or hedge funds, institutions are stepping in and saying that they will do this, thus making it easier for people to get their hands on shares to sell short. It's not a alarming thing, I would say, but there is a higher chance that the short interest, as far as the legal short interest, could continue to keep climbing higher because there is simply more shares available that could be shorted, which I do think helps our cause in the longer term, but it could definitely hurt AMC share price if we do have a lot of shorts that are taking out these short positions all at once or in a rapid pace. So we're going to have to keep our eyes on this utilization rate as well as the short interest change for every single day. Now, let's get into more of this Ortex data. We had a short interest change of 0.42%, return shares of 11.99 million, borrowed shares of 12.38 million. So that is a borrowed change of 383,075 shares. So essentially, we had this 383,000 shares added on to the total shares that are shorted. That currently sits at 70.4 million shares. The current short interest is at 13.77%. So we are seeing a lot of activity on the naked short selling side of shares that are actually being covered, but we are also seeing a ton of shares that are being borrowed. These are very high numbers relative to what we have seen. So it's not going to take too many big days of an influx or an imbalance between shares that are being covered and shares that are being short to see the short interest start to exponentially rise in price. Now, looking at the actual days on loan, this will be critical to see what the average cost of these short positions are. And we are still at 43.53 days. So that still puts us in between this $10 to $12 range. So shorts are still significantly underwater on their positions. Now, if we see a lot of these older short positions actually start to cover, and then we do see more shorts coming in to fill that gap, that could ultimately help our cause as well, because it's only inevitable that some of these shorts that shorted at $10 to $12 are going to have to cover their short positions because they are paying interest just on keeping their short positions open, nevertheless being down 4, 5, 600%. But once you see more shorts start to short the stock at its current share price, or in between this range, right, of about $50 to $60, once you do see that move up about 25%, I do personally think that shorts are not going to want to be on the losing end like the previous shorts had just been. So hopefully that makes sense to you guys. So I do think ultimately when we see this squeeze, we'll see a rapid squeeze and you will see a lot of shorts covering their short positions. Keep in mind, 70.4 million shares is a very significant amount of shares that still need to be covered. Now, moving on from the Ortex data, because that is everything you guys need to know, let's take a look at Stock O Tracker. And for this Friday, June 25th, we have in the money contracts of 91,545. That is a significant increase as well. That's about a 20,000 increase from yesterday. Out the money contracts, that is about a 50,000 increase from yesterday at 277,627 contracts. So you guys are going to want to watch, like I have been saying, Thursday and Friday. Those are going to be the significant days, and you're going to see a lot of delta hedging that is going on, because essentially when these hedge funds and institutions are on the other end of these contracts, right? So when you're buying calls, there's somebody selling you those calls. Once they do get close to being in the money, these hedge funds, they're going to have to buy the shares in order to try to get a delta zero on their positions. And this does go through a lot of complex trading strategies, but basically what you guys need to know is the closer we do get to these certain strikes, by the time it really gets close to expiring or the expiration date, you're going to see a lot of delta hedging going on, which is a fancy way to say buying shares. Now, so that is all good here. We have roughly 370,000 contracts out the money and in the money. That number, obviously, like I said, put together. So even 91,545 contracts is a significant amount. That's not enough for a full-on gamma squeeze. But if we do see a big rally tomorrow and into Friday, a lot of these contracts going in the money that are out the money, that could definitely lead to a substantial gamma squeeze and could have a lasting effect into next week. Because like I've said on this channel a lot of people are just taking winning trades from from 1 week and rolling them over to next week. And we see this as far as the July 2nd, we already have 100,000 contracts that are out the money and 47,000 that are currently in the money. So if we see a lot of these contracts roll over to next week, this could inevitably cause a big gamma squeeze. And July 16th is going to be a critical date as well. We have 183,317 contracts that are out the money, and we currently have 90,290 contracts that are in the money. So if we don't see a significant gamma squeeze from this week or even next week, I think July 16th will be a critical week for AMC. And then after that, your volume pretty much drops off until September. But September has a lot of contracts that are in the money. So really from now until July 16th, you guys are going to want to be on AMC and following these videos to make sure you guys are staying up to date with this information. Now, getting into the dark pool data, guys, this is a running aggregate number, so these are totals. These are not for the day. Position of negative 546 million shares. Position size as far as dollar amount of 28,264,000,000. Net short volume of 1,070,000,000. Net short volume as far as shares of 18,363,000. So that is the actual number that is for the day. That was 18,363,000 shares that were sold short on the dark pools today. So we do see all of this going up significantly, literally over time. You guys can see from the last short squeeze, there's been a lot of dark pool activity, which brings open a whole can of worms, right, per se. There's a lot of shady shit that goes on in these dark pools, but it's cool that we do have this website now. We can kind of keep track of this, and we'll at least be able to see when there is a spike happening. And this is significantly higher than what we even seen during the last short squeeze, gamma squeeze event, when we ran from about $2 up to 20. We were only at position in millions of 6,240,000,000. Sorry, that was worded really weird. But we did have short volume of 64 million that day. Net short volume as far as the position of 258 million shares. So we are significantly higher than what we were last time, and that'll be key to pay attention to this as well. So that is going to wrap up this video. That is everything you guys need to know on AMC as far as the Ortex data and the reverse repo. So hopefully you guys got some information out of this video that'll help you now and going into the future, because reverse repos are important to know if you're trying to trade certain macro or micro events in the stock market. So with that being said, make sure to hit that like button and subscribe to the channel on your way out, as well as if you want to get up to $70 in your choice of free stock, check out the link down below for Public. They do not route your order flows to Citadel. The only other brokerages that do not is Fidelity and Merrill Lynch, and obviously Public. So if you guys have not signed up for that, that is literally free money. You get your stock instantly. You don't even have to deposit a single dollar or link a bank account, like I said. So you guys might as well roll the dice and see what you do get. As well as if you guys want to stay up to date with the moves that we are making in the community, I send out my buy and sell alerts in real time. Check that out, link down below in the description. We just hit a over 100% winning trade today on Viacom. So check those links out down below in the description, and until next time, I will see you guys later. Take care.